This three-step trading strategy is what gives me consistent days from the markets like this, and this. And today, I'm going to show you exactly how it works. I've been trading for almost 10 years now, and over the last decade, I've tried many different complex strategies that are out there. And what I'm about to show you today is by far the easiest and most effective strategy there is. We're also going to do a full 3-month back test on this strategy to prove to you that it works. Now look, you've seen my results, but it's not really about what I've done. It's really about how you can do it too. That's really the goal of this video, for you to be able to walk away at the end of this and take consistent profit from the market as a trader with just a couple of hours of work per day. Now, we're going to be doing this in 3 very simple steps. Step 1, we're going to be identifying the key levels that we need to be paying attention to when we get onto the charts. The second step is understanding which direction is the market going to go in on this given day. And then step number 3 is how do we actually find the entries to execute our trades. So let's hop onto the charts now and jump into the very first step. So what you're going to want to do is first, you're going to need to get to your desk at 9:30 a.m. Eastern time. That's New York time. So wherever you are located in the world, you need to figure out what time that is for you. I'm in the UK. So for me, that's normally 2:30 p.m. in the afternoon. So you go ahead and figure out what time is 9:30 Eastern for you. The reason we're doing that is because we're going to be trading the New York market open. Now, one thing that I will say is you can actually apply this to London Open and also Asia Open. It's just that New York is the session that I particularly trade. So I'm going to just work with that time. It's going to be the same time for whichever market you trade, whether that's crypto, futures, stocks, Forex, whatever. So to get started with finding the range, the first thing we need to do on TradingView, we're going to go ahead and click this 15-minute time frame to get onto the 15-minute candles. That means that each candle we're looking at represents 15 minutes of time. And we're going to mark out our first set of levels by simply marking out the high like this and the low of the first 15-minute candle that begins at 9:30 Eastern time. So you can see this candle that I've just marked out, right at the bottom, you can see it's 9:30 Eastern time. I've just marked out the high and I've just marked out the low. And that's literally it. This candle is all you pretty much need to find consistent trades every single day on the market. And the reason that we're going to use this first 15-minute open is because this is where we get the highest amount of volume in the entire trading day. And the same rule applies for the Asia and London session as well. That opening candle is going to give you the most volume and the best opportunities. Now, what I'm about to show you is extremely simple. And I just want to pause there for 1 second and just ask you, just because something's simple, does that mean that you're not going to actually follow through with it? Because this is where a lot of traders trip up. I see this time and time again. A lot of the time when people comment on my videos saying, this is just too simple and it can't really be this easy. What I want you to do right now is I want you to commit to what I'm about to show you and commit to yourself to actually execute this plan over the next month, over the next 30 days. I want you to apply this model every single day religiously and just follow through with it. Make a commitment to yourself and be disciplined with the strategy. So now that we've got your commitment, let's jump to step number 2, which is actually confirming the direction of the market. Now, in order to do that, we need to switch over to the 5-minute time frames. We're going to click the 5 just here because that's where we're actually going to be executing on the chart. And also it allows us to look at price action a little bit closer. So every candle you see now represents 5 minutes worth of time. Now, all we're going to look for is for price to actually break outside of this range, just like we're seeing right here. Now, when we're waiting for that break, it does seem very simple, right? We could just literally go and short the market now because we've seen that there's a break to the low of the range. But that's not specifically what we're going to do. That's not what we're looking for. What we actually need, first of all, is a fair value gap sequence that is printing outside the range. Now, for those of you who don't understand what fair value gap is, it's just the gap between a 3-candle pattern, okay? So example here, we've got candle 1, candle 2, and candle 3. All right, so we've got a 3-candle sequence, and we happen to have a nice gap in between the candles, right? So I'm just going to mark that out like this. And that right there essentially is your fair value gap sequence. The 3 candles together is what makes up the sequence, but the middle candle, candle number 2, is the fair value gap candle. Now, there is a strategy where when you get a fair value gap sequence like this, you can actually go and enter the trade right here for a continuation to the downside in this situation. Now, that does work and it is a strategy that I actually deploy, but it causes you more losses than you actually need. So I'm going to show you a way in which we can refine this slightly to drastically improve the win rate. Now, I've spent a lot of time testing this. I've actually done a full 3-month back test on what you're about to see, and I'm pretty excited to go over that back test with you later on in the video. And look, to be clear, the fair value gap sequence we're seeing here is very, very important to give us the direction of the trade, but it isn't the entry of the trade. Now, there's always a lot of confusion about which candle should be breaking the range. So I'm going to make it very simple for you. We're always looking for either candle number 2 or candle number 1 to break the range. So again, in this sequence, we've got candle 1 here, candle 2 here, and candle 3 here. Candle number 1 breaking the range, for me, is an A++ setup. Candle number 2 breaking the range is an A+ setup. And candle number 3 breaking the range for me would be a B setup, okay? So candle number 1 and 2, preferable. Candle number 1, perfect. Candle number 2, almost perfect. And candle number 3 is pretty good. You can take it on either of those 3 breaking the range. Now, the reason the fair value gap is important is because it shows us that there is a strong amount of selling pressure that is happening through this level. And if we're breaking through this level with a lot of force, then it gives us a lot more confidence and conviction that the market may be pushing to the downside in this particular sequence. So that then brings us on to step number 3, which is how we actually find the entry for this particular trade. So what we're going to be doing is using a retest entry model. And this is extremely simple. Right, so once we've got the fair value gap and it's been created either through the high or the low, in this example, we've got it going for the low, all you're going to do is wait for a retest of the actual fair value gap. So what I'm going to do is I'm just going to mark out what that level is. So right here would be a retest of the fair value gap. Why? Because that's where the fair value gap candle actually begins, right? So the gap is beginning just where this red line is. What we need now is for price to actually retrace into this line where we can then execute the trade. So the way that I'm going to be executing this is I'm just going to go ahead and take my short position tool just here. I'm going to place it just at the entry of that fair value gap, right? So that's just there. And then for the stop loss, I'm just going to place that at the top of the fair value gap candle. So remember, candle number 2 right here, this stop just needs to go to the top of that candle. So you're going to be including the wick when you do that. And that's pretty much the position. Then in terms of targeting, what we're going to do is we're just going to go for a 2R move, right? So I'm just going to drag this down. And if you look in the middle of this, just here, you're just going to see there, it says risk to reward ratio of 2. That's all you're going to be looking for on every single trade. What that means is that on a winning trade, you're going to make 2 times as much profit as you would lose if you were wrong. And that's what really helps you to stay profitable over time in the long run. So once this is set up, you now know that that's the risk amount, there's your entry pretty much, and you're good to go. I would be placing my trade in this way as soon as the third candle has printed from the fair value gap sequence, right? So candle 1, 2, and 3, this third candle has to complete. Once that's done, I'm ready to then place a limit order at this level where the fair value gap begins. So when price then goes and retraces into that level, I can then have that order execute automatically. Now, a question that I get a lot of the time is how do you actually execute the trade? Well, in this particular example, I'm showing you TradingView, right? This is where I actually chart and analyze the positions that I'm going to take. Now, once I've got this set up, I know that if I click on this, it tells me what my entry price is right here. You can see on the right-hand side. Then what I do is I'd actually go over to my broker. In most cases, I use Tradeovate for my broker. I will then place a limit order at that price to sell. I would then go and place a buy order at the stop loss limit. So at the stop limit right here, which is around about 25,312, I would be placing a stop order. And for the take profit, again, I'll just get the level from here and I'd be doing a buy order at that point as well. So when I'm executing the trade, this is what I'm actually using. I'm using Tradeovate. And the way that I would do it, let's just say this was priced, right, going up, and I wanted to take a limit order when price comes down to around about here. So let's just say this was the level of that fair value gap entry, right? I would be clicking here and then I would be doing a buy limit if I was going to be going long. Okay, so a buy limit like this, and I just click that and that would take me long. And once that's positioned in, I would then be putting in a stop order, which is down here, and that would actually be a sell stop. The reason it's a sell stop is because I need to sell my position at my stop loss, right? And for the take profit, that might be up here somewhere, and I would be clicking here, and I would just be doing a sell limit because the price is going to go up, and it will be a sell limit at the top. Now, in the example we're talking about on the chart right now, we're doing a sell position. So in that example, I would be doing a sell order. So price might come out like this, so somewhere like this. I might say, okay, I want to do a sell limit here, and then that would be set. So as soon as the price hits that level, it would then come back down. And then up here, I would be doing a buy stop because then I want the price to stop when the price goes higher and I'll be buying it back, right, at a loss. And for the target, I'd be coming down and I'd be doing a buy limit at the bottom. So basically it's the opposite, right? We're going to be doing sell to go down and the target is a buy and the stop is a buy. If we're going long, we're going to do a buy, but the target is a sell and the stop is a sell. So back to our example here, what ends up happening is price will then come back and it will tap into the fair value gap. And what you're hoping for is for the fair value gap to hold and allow price to then reject and go back to the downside. So right there, we can see price came very, very close to our stop, but this is why we use the entire candle's wick for our stop, right? So price came close to a stop, but it has continued to the downside. And then we'll see that price will continue, keep going, and eventually hit our take profit, just like that. This strategy has a very good win rate, and I'm going to be revealing what that is later in the video. And it's an excellent strategy to use if you're trading prop firms. And by the way, if you do want to use a prop firm and get an 80% discount, you can use the code XOTO over at Apex or over at Take Profit Trader, and you'll be able to get a decent discount using that code. I'd love to take you through another example where price action isn't as decisive as what we just saw in the previous example. So once again, here we are again. We're looking at the 9:30 15-minute candle. You can see we're on the 15-minute time frame. Let's go ahead once again and just draw out the high of the range like this and the low of the range like this. Once again, that just gives us our levels. And remember, we're just going to go ahead and switch over to the 5-minute time frame so we can get the 5-minute price action. And remember, what we're looking for is a break of the range initially so we get an idea of the direction of the market, right? So we've got a break to the high of the range, which tells us that we may have some pressure going to the upside. But what we need to look for is if we have that fair value gap sequence. Now, in this particular trade example, you can see that we do actually have that fair value gap. Let's just mark that out right there. All right, just there. And in this particular example, it looks like the gap is very small, right? We've got candle 1, 2, and 3, but these are quite wicky candles, first of all, and the gap is not very big. However, we do have candle 2 that's printing outside the range, so this once again would be considered a decent setup for me. The only reason that I am a little bit cautious about this one is because I don't like the characteristics of the candles just because the gap is so small. Remember, the bigger the fair value gap is, the more decisive and high conviction there is in that candle and in that sequence, right? There's a lot more confidence to be had when PA looks very, very decisive. And because we've got some wicky candles here, it doesn't feel as decisive as the initial example I showed you. So this would be considered maybe not as clean of a setup. However, because we do have that fair value gap sequence, we've got a fair value gap there, we can now look to get a retracement into this fair value gap to look for a continuation to the upside. So in this example, we are bullish. So we're going to go ahead and take our long position tool this time. We're going to place it at the entry of the fair value gap, which is just there. We're going to put our stop to the bottom of candle number 2, and we're just going to target that 2R move, which is just there. Okay. So at this time, you're all good to enter the trade, and we've got the target set, we've got a stop loss set, and we can go ahead and see how this trade moves. So we can see that price wicks right into this fair value gap once again, and then pushes off quite aggressively off the gap, which is really what you want to see from a fair value gap. And then price goes ahead and hits target very, very quickly in this situation. So we went from a candle at 9:55 where we got our initial retrace and entry, and we were pretty much out of the trade at 10:10. So a relatively quick trade in that specific example. I want to show you one more scenario where price action really isn't the best at all. So once again, we've got an example here at 9:30, and I'm going to mark out the high and the low of the 15. And we're going to switch over to the 5-minute time frame. Now let's take a look and see what happens in this example, right? We've got price wicking outside of the high of the range, and then we've got these really indecisive candles, right? We then have almost a break to the low, not quite yet, and then eventually we get the break. However, as soon as we get the break, you can see that price pushes right back into the range. That's not the reaction that I really like to see. And also, most importantly here, guys, you can see that there is no fair value gap here. So there's no fair value gap, and price has continued to the downside. So a lot of the time people will ask the question, Joey, what do we do in this situation? Well, guys, sorry to say, you don't do anything. You don't take the trade, right? The trade is not there. Price action has not allowed you to take the trade here. Therefore, this is one of those situations where you just do not take this trade. And that's why it's very important to have a mechanical system like this, guys, because a lot of the time people will see a break to low like this and they'll just say, oh, I'm just going to go short. Now, the crazy thing is that if you did go short here, right? If you went and took that short position on like this candle here, for example, and you just put your stop to the high of that candle, this one here, you could have still actually won the trade, right? You could have easily picked up your 2R relatively easily here. However, this is not following the principles of the rules of this strategy. This would be gambling, okay? Because you're not actually following the rules. You have to follow the model exactly. If you don't get that fair value gap sequence, you don't take the trade. And that's what's going to allow you to preserve a really, really good win rate over time. So let's take a look at how this strategy actually performed over a 3-month period. Now look, before I actually show you the results of this strategy, I just want you to know that yes, the results are very, very good. What you're going to see is going to prove to you that this works. However, in order for it to actually work, you have to be consistent. Because look, this probably isn't the first time that you've seen a strategy like this being shown to you on YouTube, but you're still not profitable. You still haven't actually made any progress. And the reason I know that is because I used to be in that exact same position, right? And that's why I now help other traders out to help them avoid a lot of the mistakes that I made when I first started out. And I do this by providing a full educational course as well as a Discord community where I share all of my analysis, my ideas, and every single model that I trade inside my community. In our Discord, we have genuine traders that are making bank every single day. We have people passing prop firm challenges every day. We post our certificates, we post our wins, and you can genuinely see traders who are using the models that I teach actually making money with this every single day. You also get access to a bunch of different tools. You get a journaling tool and different software dashboards and tools that we've actually built for our community. Now look, if you're interested in that, I'll leave a link in the description below if you want to go ahead and check that out. So let's take a look at this back test. As you can see right here, the P&L on the strategy is $23,606. That's a 47% growth in the account that I was trading here over a 3-month period, 47%. This is a total of 58 trades, okay? This isn't just 2 weeks, this isn't just 3 weeks, this is 90 days of trading, 58 trades that we've taken with a win rate of 60.34%. You can see that we have positive expectancy of $407 and a profit factor of 305. And just to really prove the point here, if I go into my sessions, you can actually see I've got my 15-minute retest strategy, right? That's the strategy that I just showed you. I'll go to the chart right here and I'll show you every single backtest that I actually played out, right? I'm not just saying this and just showing you a random dashboard. You can actually see every single trade that I have taken here, right? Wherever you see these little boxes, that's the 15-minute range that I am drawing out manually every single time. I did this over a 3-month period, and it took me a long, long time to actually do this manually, but I just want to show you that I went through the effort to actually do this. So now you've got everything you need to do this. You've got a proven strategy that works with proven back tests from someone that's actually trading this live every single day with students that are doing this every day. So you've got no excuse as to why you can't use this strategy today. And remember guys, look, this is not easy. Trading is not easy. Otherwise everybody would be doing this, right? But we live in a time where we have great resources on YouTube, not just me, but lots and lots of people that teach very valuable stuff. My best advice that I can give you right now is take the stuff you learn and actually use it, actually apply it and go and test it out for yourself before you doubt it, before you doubt yourself, before you doubt the person teaching you. Go and actually try it for yourself. I learned the same way. I learned from mentors. I learned from teachers out there who I had to watch and learn from and practice and execute. And then from that, I built my own executions, my own little twists, my own little techniques to try and build my own system that worked really well for me. You're going to take this and probably apply little tweaks and changes yourself. And that's what you should be doing. You should be taking this stuff, using it, and molding it into a way that actually works for you. If you enjoyed this video, make sure you hit the like button, hit subscribe, and I'll see you in the next video.